What's good, everybody? Welcome back to AZ Trading. Hope you're having a fantastic weekend. And during the end of the week, I managed to make a few trades, but one of them in particular that I'd like to show you guys is this huge bearish move on gold. And if you stay tuned throughout this video, I'll explain the exact pattern I used to find this move, as well as my analysis prior to my entry and the reasoning why I took it. I'll just turn on my executions so you can see that I'm not just a hindsight trade reviewer and that I'm not just an educator on how to read price, but that I'm also putting into practice all the concepts that I teach, which is surprisingly rare in the world of trading, where all these educators teach all these concepts but you never see them actually use it. So the pattern I primarily use in all my trading is the RMR pattern, and this is the exact pattern we use to find this move. However, you can't just be using this pattern everywhere, since before you even look for the trade, you'll need more context to decide in which direction are you aiming for, whether it's bullish or bearish. For example, if we don't use any context and we purely look at the RMR, we could argue that under these lows we have the raid, then the market structure shift occurs after breaking some swing highs, and then the third thing, we return to a gap down here. And if we place our long there with our stop at the bottom of the raid, we would just get stopped out. Let's do another example. So if we look at this swing high, as soon as we broke this swing high, this could be a raid. The next thing is the market structure shift. So as it broke through this swing low, this could be the market structure shift. And finally, we look for a return. So within that shift, we have a gap over here. Now, if we place a short during that gap and our stop at the raid's high over here, we can see that this would be a successful trade. And in fact, this is actually the trade that we took. However, you can see that the problem still remains in that how do we know which one of these to take? Because both of them are following the RMR pattern. One is a bullish one and one is a bearish one. How would we know which one to choose? And that leads me into the three main things that I look at, which will help me to decide whether I look for a bullish RMR pattern or a bearish RMR pattern. Alright, let's start with the first one, which is the market sentiment. This one can be very easy, and just at a quick glance of the chart, we can get an idea of this. So if we just scroll out a little bit, we can see that during the Asian session and throughout the London session, price is quite obviously bearish. Would you agree? So that means the market sentiment is currently bearish and traders are more likely to be shorting the market, since retail traders are trend following in nature. So with this bearish sentiment in mind, so lows are being taken out and these highs have been left untouched. So then we can think to ourselves that the sentiment is likely to be taken out, meaning after bearishness, we can expect some sort of bullish manipulation in order to break sentiment. And we're not expecting this break in sentiment at a random time. There are likely times during the day when sentiment is likely broken, and we can see that during the 5th of September, if we look at Forex Factory on the Thursday at 8:30 in the morning, we had a high impact news event. I've just drawn a line where 8:30 is, and we can see that once 8:30 ticked, price pumped up bullishly, breaking this short-term swing high, meaning all the retail traders that were placing shorts, thinking their stop would protect them at the previous swing high, they would all be stopped out. And once those retail traders have been stopped out, that's when a likely time for the real move to happen. So the next thing we look at is the bias, or the daily bias. There are so many videos on this that overcomplicate it, but essentially all you need to do is look at where price is at currently, find a likely objectives above, find the likely objectives below, make an informed decision on which one has more liquidity resting in that area and which one is more likely to reach, and that will be your bias. I've just zoomed out to a 30-minute time frame, and if we look above where price currently was, we have these clean equal highs, but now we have to look at what is below. So if we scroll to the left, we can't see anything, so that means we go to a higher time frame. So we're now on a weekly time frame, the big boy chart, and we can see that we have these huge equal lows over here. So I'll just drag those equal lows across, and now we can make an informed decision. Are those equal highs or are those huge equal lows a more likely objective, or which one has more liquidity resting there? And if you're thinking what I'm thinking, of course it's the huge equal lows that has more liquidity. So that'll help form my daily bias to be bearish, which will help me filter out all the potential long moves and only look at the bearish patterns that form. I just want to say something about daily bias, because online it seems like people view this as the holy grail and that all you'll need to be successful in your trading is to have a correct bias. But the thing with trading is all our decisions are based on probabilities, meaning you'll never find a perfect way to find a correct bias every time, and in reality your daily bias won't be correct a lot of the time. It just seems like people think that there are these clear-cut rules to form a daily bias that makes you correct every single time, but that's just not the case. Alright, so now that we've covered the daily bias and we're looking for moves to go short, there's one more thing I really like to look at that helps with my trading is the relative strength. So what this means is whenever I trade gold, I also look at silver as well as platinum. And I mentioned this in one of my previous videos as a little trading gem, but long story short, if we're looking for a bearish trade, we want to be finding the asset class that is the weakest of the three. And vice versa, if we wanted to go long, we'd find the one that is the strongest. So how can we do this? I'll just draw a line prior to our entry and we'll just monitor a few swings before then. So we have this low here, a lower low and another lower low. Let's move on to silver and we can see that we have that same low, a higher low, as well as another higher low. And finally, let's move on to platinum and we can see that we have a low here, we have a much higher low, as well as another higher low. So in this case, price made it very obvious to us which one is the weakest and the strongest. So plat is obviously the strongest, making higher lows. Silver is the second strongest, so it's making slightly higher lows. And gold is no doubt the weakest, making lower lows. There are times where you'll notice that when you look at the relative strength and you compare the three, that they will all be very similar, which will make it a bit harder to decide which one to trade. However, when it's as obvious as this, we want to make sure to take advantage of shorting the weakest. So just a quick message, with relative strength, I use gold, silver, and plat. But if you're an indices trader, the trio of markets you can use for relative strength are the Nasdaq, S&P, and the Dow. Alright, now that we've got all of our context out the way, so sentiment was bearish and we expected it to be broken before the real move, we've got the daily bias to aim for these huge equal lows, and we've chosen the relative weakest of the three, which in this case is gold. Now we can start to look for a bearish RMR to form. So as I outlined at the start of the video, we have a raid here, we have a market structure shift below this swing low, and we have a return within this gap here, meaning when price retraces into this gap, that's when we can place our short. So now things might be a bit clearer to you why we can filter out this bullish RMR and focus on this bearish one. Oh, and I forgot, just to make sure you're getting a fair price, draw a fib from the top of the raid to the bottom of the shift, and if you're above that 50% level, then it's considered a premium in price, meaning it is a fair price to short. And once you've got your entry, make sure you protect yourself using a hard stop loss, which in my case is at the top of the raid, and then you can look for objectives below. So I've zoomed into a 3-minute chart and my first objective was at this 3-minute gap over here. My second objective was at these equal lows, and my final objective, if we zoom out to the weekly chart once more, we just have the bottom of the swing lows over here. If I extend that one all the way out, once price stabbed through that area, that's where I took off my third partial. So overall we captured around 230 points on gold, and using this pattern, let's have a look at how much drawdown we went through. Essentially nothing. Alright, that'll be it for this trade, guys. If you'd like to take a screenshot of the naked chart so you can document or journal this picture and outline the RMR yourselves, here you are. But otherwise, if you enjoyed this video, give it a like, hit that subscribe button and turn on that notification bell. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, take care. Peace.